Welcome, everybody, to the Spend Life Well show, where we apply biblical principles to your financial journey. I'm Certified Kingdom Advisor Mark Trice. I'm here in the studio with fellow financial professional Jesse Hamilton. Everybody say hello to Jesse.
Hey, Mark. How's it going?
Doing well, Jesse. Hey,
Good.
You got your taxes done last month?
Just in time. Yeah, I did.
All right.
Did
all
you?
right. Oh, of course I did. I always love paying my taxes.
Yeah.
Not really.
Yeah, we're about a couple weeks after they were due, so I hope that you're not hearing that for the first time.
Yeah,
But-
if you haven't filed by now, you're a little late. Hopefully you would file an extension.
Mm-hmm.
But kind of give us an idea of what we're talking about today, Jesse.
Sure. So we're going to talk about who's paying the most taxes in the U.S. We have a very interesting set of stats here on just overall data about income earners in America. But first, let's talk about Luke chapter 12, because
Yeah, Luke chapter 12 gives us some interesting perspective on paying taxes. So what does it say?
So the Pharisees and the Herodians are sent in to try to trick Jesus, right?
Yeah.
And Luke chapter 12:15 says, "Should we pay or shouldn't we?" But Jesus knew their hypocrisy. "Why are you trying to trap me?" he asked. "Bring me a denarius and let me look at it." They brought him a coin, and he asked them, "Whose image is on this, and whose inscription?" "Caesar's," they replied. Then Jesus said to them, "Give back to Caesar what is Caesar's, and give to God what is God's." And they were amazed at him.
And you know they're walking away. He's like, "Ugh,
Dang it, yeah.
he tricked us again, or he duped us again." You know, that all the time these Pharisees and Sadducees and the Herodians and so forth trying to trip him up because they want to give him a reason to,
Right,
to
to get him in
accuse
trouble.
accuse him of blasphemy and so forth.
Mhm.
And Jesus, being all knowing and all powerful God, knew what they were talking about and what they were trying to trap him. But
I love it when he does that.
it is a question we get a lot as financial advisors. Why should I have to pay taxes if I'm a believer?
Right.
And the reality is, as Scripture tells us, we should render unto Caesar what is Caesar. So we should pay taxes to the government up to what we are supposed to, not a
Right.
dime more.
Exactly.
And so that's why it's so important that everyone uses a CPA or a tax professional to help you prepare
Right.
your taxes or ask questions at least to make sure that you are not sending in more than you have to the federal government or your state government, depending on where you
Exactly.
live.
So today we're going to talk about some of this tax data across the country and who's paying the most of it. But keep in mind, we're not tax professionals, but as financial planners, right, Mark, we are deeply intertwined with the tax world.
Intertwined, yeah. And there's also a lot of policy decisions and a lot of what's the word I'm looking for, Jesse? A lot of hoopla out there about people paying their taxes.
Yes, and it can get political very fast.
It's very fast, and then one of the most common ones is that rich people should be paying their fair share.
Mm-hmm. And we'll talk about that in a minute.
Okay, all right, good.
But Mark, can you name the 7 states that don't have state income tax?
Well, I know Texas is one,
Okay,
right? And
right.
then there's Wyoming, I think, because
Right.
they talk about that a lot.
So we got also Alaska, Florida, Nevada.
Nevada doesn't pay state income tax. I'm
Nope.
surprised they don't. I guess people go there and gamble a lot.
South Dakota and Washington.
Okay, all right.
But then if you throw in Tennessee and New Hampshire, there's a couple little rules. They don't really pay income tax either.
Okay, all right.
Yeah.
So you were telling me you were reading a Wall Street Journal article about the proportion of different taxes and who's paying what and so forth. But you also
Yes.
stumbled across President Biden's tax return, right?
Yeah, so he made public his 2022 return. You can go find it online
Very
if you're
honorable
interested.
of him, I guess.
Okay, so the Biden household, $580,000 of income.
That's earned. That's adjusted gross income.
They ended up paying about 23% tax on that. And that comes from Joe's salary and Jill's job at the community college and all. But they also donated about 3.5% of their income. So
That actually is a lot higher than Joe and Jill are given in the past.
right.
Now, 3.5% of their income was about $20,000,
Mm-hmm.
Which is a lot of money, but relative to the proportion of their entire earned income is quite tiny, actually.
Right.
So
And-
they're not tithing 10%
No,
of their
they're not.
gross income, are they?
Yeah, but if you make it all the way up to leader of the free world, you can make about $400,000, right?
Okay, all right. So now help people understand a little bit about who pays income tax, how much of that makes up the federal budget, et cetera.
Great. So income tax this year, they predict will cover about a little over half of the federal government's budget.
Okay.
and the rest will come from Social Security taxes, corporate taxes, estate taxes, all that stuff, all
right.
taxes. But your income tax is going to pay for over half of it.
Well, and there's some interesting stats about who pays what.
Right.
I know there's a stat, I don't know if it was in this Wall Street Journal article, but I've read it many, many times before. Over half of Americans do not pay any federal income tax.
Right.
You heard me right. That's over 50% of Americans do not pay one dime, 1 cent of federal income tax.
It's because 43% of filers are in the under 50,000 income bracket, and they aggregate about 10% of the income in the United States, but there's so many credits and lowered tax bills that they end up paying negative 4.8% tax.
Yeah, and they're actually getting handouts back to them.
Right.
I've shared you one time when I was starting this business many, many years ago, and I didn't have any income yet.
Mm-hmm.
And it was basically when I did my returns, it was telling me that even though I did not pay $1 of income tax, I was going to get $4,000 back in terms of these programs and different types of earned income credits, etc.
Yeah.
And I thought, this is crazy. I can't ethically do this because I didn't pay any money into the system. So I basically changed my numbers so that it wouldn't show that.
Yeah.
And it showed I earned a little bit of income, and I did, but I could have written it off. But I was like, I'm not going to get money back from the taxpayer that I didn't pay into it.
Sure.
So just my personal preference. You might not have a problem with that. More power to you. But anyway.
So there's going to be two figures here. One of them kind of makes sense, and one of them is totally crazy.
Okay.
So the first one, about 25% of filers will be in between 100,000 and 500,000 of income. I know
Okay.
that's a big gap.
Yeah.
It's a very big gap.
Yeah.
But this is about half of the aggregate income in the U.S., and they're going to pay about half of the income tax. That
Okay.
makes sense.
So
Right?
25% of the filers pay about 50% of the federal income tax.
Yeah,
Okay,
that
keep
makes
going.
sense, right?
Keep going. There's more.
But a few select 900,000 people in the U.S. will earn over $1 million.
Okay.
And they account for 40% of the income tax paid.
Okay. So you're telling me that, and I don't know what percentage of that is.
Well,
It's
there's
just-
181 million tax filers.
Okay, so this is less than 1/10 of 1%.
It's very small.
Make over $1 million, yet they pay 40% of all the income tax.
Right.
That seems pretty fair to me,
Depending on how you look at it.
or not. I don't know. That seems like so folks making over $100,000.
$1 million.
No,
right.
I'm going up to the.
Oh, you're going
previous-
back to the other stat.
Folks that are making over $100,000 are paying well over 90% of all the federal income tax in the country.
Mm-hmm.
Okay,
Right.
all right. And then there are others that have long-term capital gains and so forth.
Right.
Um,
This is very interesting. So 70% of long-term gains are reported by people earning over $1 million.
Okay.
And that makes sense. Well, first of all, that number, if you're curious, is $954 billion.
Okay.
That's a lot.
Yeah.
But the majority of those gains come from people with income over $1 million.
Typically because they have investments and things.
Yes,
that
they
are-
have investments
Okay.
outside of their paycheck.
Okay.
So this creates the interesting situation where the high-income households are receiving most of their income from investments.
Okay.
But the people under the $500,000 bracket, which is most people, they're getting a majority of their income from wages,
Okay.
which makes sense.
Yeah. So this just provides a little bit of context on where the money is coming from. And once again, over half of Americans do not pay one penny
Right.
of federal income tax. In fact, they get money. I don't want to say get money back.
Not
they
everybody,
get
but yeah.
they get free money, and they don't pay taxes.
Mhm.
All right. So there's some different proposals out there, Jesse, to change how income taxes are calculated. Can you
Right.
give us a little bit of information about that?
Well, the current administration is wanting to change these things. You can go find all these proposals, and this Democratic administration is obviously trying to increase those numbers for the high net worth people. Some of it involves step up in cost basis for large estates and just high earning people in general. But talking about average income rates,
Yeah. Income tax rates.
income tax rates. So the actual average amount on your total income is very interesting because people under 100,000 are averaging at 3.6% tax.
Okay, all right.
But that's only interesting because of the credits that are being paid out and everything.
So what about those that make more than $1 million?
That number jumps all the way up to 25.5%.
Okay, so they're paying more of their fair share, as our president says, more of their fair share. They're paying up 25%. So half of Americans don't pay one dime of tax. The folks that are making $50,000 to $100,000 are paying about 3.6% of their income in tax.
Yeah.
So I don't understand all this stuff about paying your fair share. It looks like those people that are earning more money are paying more and a higher percentage of their income or investment income in income tax.
Comparing just average tax rates, yeah, they're paying about 5 times more.
Okay, all right. So next time you hear some Politico or news pundit say that rich people should pay their fair share, think about the stats that we just shared with you, and does it make sense? Should I have to pay more or should I pay less? So basically what Scripture tells us is, yes, we are supposed to pay our responsibilities in income tax. There's not a way around that. And so we need to do that. Should we pay more than we have to? Absolutely not. No. If we're following the law as believers and completing our tax returns as direct and honest as possible, then we have nothing to fear. We are doing our responsibility and fulfilling our obligations as citizens.
So specifically for our listeners, though, if they really want to follow out and do what Jesus said, what are the best ways to do that?
Well, you need to make sure you have a good tax preparer, right?
Okay.
We've seen many examples of people. We'll get a client's tax return from the previous year, and we realize the tax preparer missed a major deduction that the client was eligible for.
Yes, Mark's talking about a true story.
Yes, we've seen this happen a couple of different times, just even this tax prep year, where we've seen mistakes were made. So you need to make sure that you have a good tax preparer. Yes. Now, nothing against the tax preparer in a box. You can go into Walmart and have somebody there do it for you.
Right.
You can go one of the major tax prep firms, but they're receiving minimal training. They are not CPAs. They are not. They are registered tax preparers, but they haven't taken all the advanced planning and advanced training that most CPAs will have. So you want to make sure you have a good tax preparer, and you need to study up on the way. And a good tax preparer will help you prepare for that. Not just focus on the return this year, but help you prepare in the future.
Right.
So you also want to make sure that you are optimizing your giving strategy.
Right, especially if you have an IRA and you're above age 70, right?
Yeah, we see a lot of folks that miss that opportunity to reduce their income tax that they owe simply by making the gifts that they normally give to church or charity from their IRA. Now, you have to be, you can only start doing it the year that you turn 70 and a half. So that's a key criteria, but we were just visiting with someone just the other day. They were making gifts, and what they were doing was they were withdrawing money from their IRA so they could write a check to the church, and they paid 20% income tax on that money they withdrew.
Right.
If you do what we call a qualified charitable distribution from your IRA and you're over the age of 70 and a half, then you don't get taxed on that income.
Right. In this situation, the one move of where the money came from and went could save almost $5,000 in tax money.
Yeah, exactly. And they were shocked to learn that they could have done that.
Yeah.
They won't make the same mistake twice.
Yeah.
The point is you need to work with a financial professional, a tax preparer that's been trained really well, maybe even your financial advisor, to essentially minimize the amount of tax that you have to pay, and don't pay a dime more than what you're obligated to pay.
Right.
And so with that, Jesse, I think we'll wrap up today's show. You've been listening to the Spend Life Well show, and we'll be back next week.